The Indian rupee has been slipping and now it's flirting with record lows against the US dollar. 90 rupees for a dollar seems steep, right? That's because it is. So if you're wondering what's going on, let's break it down for you. Clean and simple, no jargons. Reason number one, and honestly the biggest one, is the almighty dollar. Now, whenever the US Federal Reserve signals that rate cuts might be delayed, investors rush back into the safety of the US dollar. And when the dollar strengthens, emerging market currencies, including the Indian rupee, obviously weaken. Now remember, in this year, 2025, markets have been flip-flopping on Fed expectations. One week, traders bet on early cuts. Next week, strong US data kills those hopes. And each time expectations swing, the rupee swings with them. The second big factor, and this is a sensitive one for the stock markets too, foreign investor outflows. That's right. When overseas funds pull money out of Indian equities or bonds, they sell rupees and buy dollars. More demand for dollars naturally pushes down the value of the Indian rupee. And then there's oil, the slippery one, our Achilles heel. India imports over 85% of its crude, so when oil prices rise or when the rupee is already weak, our import bill shoots up. That means we need even more US dollars, adding further pressure on the Indian rupee. Now the big question everyone asks, what is the RBI doing? Are they letting the rupee fall? Well, the short answer is no. They're just managing it, quite carefully at that. And RBI's strategy is controlled, not fixed to a price point. It wants to curb volatility to allow gradual adjustments, not hammer down a floor price. IMF labels this strategy as the crawl-like arrangement and not the stabilized arrangement as it had classified it earlier. Now this indicates small, measured moves, not rigid controls by India's central bank. Now put all of this together and you get exactly what you're seeing right now. A rupee that's under pressure from a strong US dollar. The US Fed's awaited decision on rate cuts, or let them be. Global forces edging out foreign investors who sell the rupee to buy the US dollar, adding further strength to the greenback. And of course, the last one, oil prices, where every tick upwards in global crude oil makes the rupee nervous. So what should you watch out for over the next few weeks? Well, exactly four things. First up, watch out for the commentary from the US Federal Reserve. Then look at oil prices. Also monitor the foreign investor flows, and finally RBI's own forex action. Any shift in these will steer where the rupee goes from here. And remember, the rupee isn't collapsing. It's adjusting in a world where the dollar is king again and global uncertainty is running high.